Hey Metro Richmond, are you curious what's going on in our local housing market? We'll break that down in your October 2024 housing market update. What is going on, party people? My name is Chris Elliott. I'm a local realtor in Metro Richmond, and in this monthly market update, we are going to break down for you mortgage rates, inventory, home prices, and predictions for 2025. So buckle up, let's jump into it. All right, so first and foremost, mortgage rates. So on September the 18th, if you have not heard, the Federal Reserve, headed by Jerome Powell, cut the federal funding rate by 50 basis points, which for those of you that are not in the finance world, that is 1/2 of a percentage point. Now, the federal funding rate is not interest rates, it's not mortgage rates, it's the overnight rate at which banks lend to each other, and that was cut by 50 basis points. Now, the funny thing is, like I said, the Federal Reserve does not directly control mortgage rates. They influence mortgage rates with, financial policy. But the funny thing is that mortgage rates were sitting at about 6.15% on the day that the federal funding rate was cut, and they have since shot up to 6.64% at the time of this recording, or at least on the time that we pulled this graphic on October the 11th. Now, while the relationship between the federal funding rate and the 30-year fixed mortgage is a little bit too much to explain for this video, Bankrate said it best when they said the Federal Reserve doesn't determine fixed mortgage rates, but its policy decisions weave into the broader economic picture that informs and influences your borrowing costs. Now, all that being said, experts are still predicting that mortgage rates will inch down throughout the remainder of this year, as well as heading into 2025. As you can see in the graphic, Fannie Mae, the Mortgage Bankers Association, and Wells Fargo, if I could speak, are all forecasting that rates will be in the high 5% by Q2 of 2025. So we know that the collective experts are all predicting that mortgage rates are going to be coming down, and you might be asking yourself, what effect is this scheduled to have on the housing market? Well, for starters, we know that a decrease in mortgage rates is going to get a lot of would-be sellers off the fences, off the sidelines, and into the market. These are folks that have been reluctant to let go of their COVID interest rates. They want to sell, but they're reluctant to let go of the low interest rates in a more higher interest rate environment that we've been in. In a recent study by Bankrate, 35% of homeowners surveyed said that they would sell their homes if rates got under 6%, and 30% said that they would sell their homes if rates got under 5%. And of course, lower mortgage rates are also scheduled to bring a lot of would-be buyers off the sidelines into the market as well. That same Bankrate study found that 52% of would-be buyers said that they would buy if rates got under 6%, and 47% said they would buy if rates got under 5%. And if you're wondering, hey Chris, that doesn't seem to add up to 100 or seems to add up over 100, respondents were allowed to answer to more than one of the answer options. So last but not least, let's talk about home prices. As you can see, 10 of the top forecasters are all predicting that we are going to continue to see price appreciation through 2025, but at a more moderate pace. Some are predicting more appreciation, others are predicting less appreciation, but the average of all 10 forecasters is 2.6%. Now, I'm gonna make a bold claim that I believe in Metro Richmond, we're gonna see closer to 5 to 10% appreciation in 2025. Let me break that down for you. So in this past month of September, we are sitting at 8% year-over-year appreciation. And for layman's terms, that means compared to September of 2023, our median home price has appreciated 8% in the last 12 months. And even though we expect to see more buyers and more sellers enter the marketplace in 2025, I personally don't believe the supply and demand dynamics between buyers and sellers is going to change all that much going into next year. Right now in Metro Richmond, we are sitting at 1.4 months supply of inventory, which is simple industry jargon to convey to you that we are still in a red hot seller's market. And even though we are scheduled to see more sellers enter the market next year, if we see a proportionate amount of buyers enter the market as well, home prices are going to continue to appreciate at the same rate. And another possible scenario is that we see more buyers flood the market than we see sellers flood the market next year, and we are going to see the rate of price appreciation appreciation accelerate as the supply and demand economics tip even more in the favor of sellers. I'll leave you with a quote from Lance Lampert, the co-founder of Resi Club, who said it best. Even if the national home price forecast for 2025 is correct, it's possible that some regional housing markets could see mild home price declines, while some markets could see elevated appreciation. That has been, after all, the case this year. And folks, I think that's going to be the case in Metro Richmond in 2025. I think we are going to be one of those home markets that sees above average home price appreciation. All right, so what does this all mean for you? As always, we are going to give 3 tips to our would-be sellers, as well as 3 tips to our would-be buyers. Let's tackle the sellers first. Tip number 1, experts are not predicting that the housing market is going to crash if your candidate is not elected. And you may be saying, hey, Chris, how do you know who I'm going to vote for? And I would tell you that experts are not predicting that the housing market is going to crash no matter which candidate gets in the office and which candidate doesn't get in the office. So the historic data shows that while everyone thinks that the economy is about to crash or the housing market's about to crash due to politics, presidential elections historically have not had that large of effect on the housing market and is not predicted to have that large of a impact on the housing market, at least in the immediate, going into 2025. All right, the second one is going to be a harsh piece of advice or a hot take for those that are currently on the market or have been on the market and are not finding success. I hate to tell you, but it's not the market, the election, the time of year, or mortgage rates. If your home is not selling this time of year, it's probably something that needs to change with your property or with the agent that's marketing your property, because what we're finding is that despite all of those things, homes are still selling. The data shows that homes are still selling at great prices and selling in record time. And the data shows we are still in a red hot seller's market. Last but not least, if a 2025 sale is on the horizon for you, I would recommend start prepping now. What does that look like? That looks like simply having a conversation with a real estate professional. Geez, if you're in Metro Richmond, I would love to be that professional. Contact me via the links in the description of this video. But if you're thinking about a sale in 2025, reach out to a real estate professional, have a conversation, get a realistic opinion as to what your home is worth, what, if anything, can be done to, sell it faster or sell it for more money, and start working on those things now, or at least get an idea of what you need to do come January 1. We see way too many sellers that wait until January, February, March, April, when in their mind they want to put their home on the market, not realizing that there's, things that could have been done to get the home ready, to boost the value, to sell their homes quicker, have a less stressful experience. So start prepping now, have a conversation now. For my buyers, I'll say it again, the housing market is not going to crash if your candidate does not get elected. Nobody is predicting a huge crash of the real estate market. We've had some prospective buyers saying that, hey, if their candidate doesn't get in the market, doesn't get in office, prices are going to crash and they're going to buy then, or hey, if their candidate gets in office, then everything's going to be better and rosy and they're going to be in a better position to buy. The reality is experts are not predicting a huge change to the housing market no matter what candidate gets in office. So just realize that I don't predict that having a huge change. Secondly, you cannot renegotiate the sales price. So what we are finding, or the expectation that we have, is that home prices are going to continue to appreciate, and the rate of appreciation could even accelerate as interest rates come down and as more buyers head into the market. So the cool thing about real estate is that there's 2 functions of your mortgage payment. There's the price that you've paid for the home and how much you owe to your lender, and then what the interest rate is. Fundamentally, those are the 2 big factors of your mortgage payment. The cool thing about real estate is that if and when mortgage rates come down, which experts predict they will, you can refinance your loan and bring your monthly mortgage payment down because the interest rate can come down. The only thing that you are not going to be able to change is you cannot go back and renegotiate the sales price that you paid for the home. So what do I mean by this? If you're able to find a property now that makes sense for you and your family, that, of course is within your budget, we recommend buying it now, even at the higher interest rate, because you're going to be able to refinance down to a lower rate at some point in the future. Whereas if you wait for rates to come down, yes, they will come down at some point in the future, but prices more than likely are going to go up, and you're going to lose the opportunity to build that equity and to get a lower payment when the rates do come down. And then last but not least, we've already kind of talked about it, our most savvy clients right now, our most savvy buyers, are getting in front of the wave. So what I mean by that is we are expected to see a large number of buyers enter the marketplace in Q1 and Q2 of next year as rates come down, as the collective collective genius is that it's a good time to buy now, and our savviest buyers are buying properties now because they know that home prices are going to continue to negotiate, and as interest rates come down, they're going to be able to refinance and take advantage of the lower prices that we're experiencing now that we don't expect to experience in the future next year. So hope that makes sense. If you have any questions, concerns we didn't address in this video, throw me a comment, shoot me a DM. If you would like to work with us, contact me via the links in the description. Thanks for tuning in. Look forward to seeing you next month.